Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, welcome to trade 27. Our last trade exited way back here, and one of the things that we've been noting is Adam sure has taken a long time to get back into a market. And I think we haven't quite learned our lesson yet. We waited out quite a bit. It's too bad we didn't stay in, but as of October 21st right here, Adam's noticing a little bit of consolidation. So we're going to go ahead and take an entry right here. You can watch that trade go in live, and the order's in and filled, and this trade is on. Well, it's been an interesting couple of days. As you know, we went in here at the end of the day. The next day there was a big gap down, but the market seemed to run up, and it seemed like we were going to be in reasonably good shape. However, the following day, market gap back down, and look at how much it ran down. We knew we were going to be in a little trouble. And now the question is, when do we get out? We waited for another day. Luckily, there was a gap up, a gap up to here, and then the market did drop a little bit. But Adam decided to go ahead and we're going to go ahead and take an exit. So you can watch that trade go in live. And this trade is over. Let's head over to the tracking sheet and see how we did. Well, that trade closed on October 24th. On the 24th, the S&P was at 579.23. That brings our year-to-date buy and hold strategy up to 21.86. We picked up about 1.27%. That's a great return for the S&P 500. Unfortunately, our trading model is not performing well at all. We actually lost a bit. As you remember, we were staying out of the market. We've noticed that that's kind of a mistake we need to look at a little more carefully. So we didn't get a chance to pick up any of the gains, and we went in about the time or just enough time to take a loss. So we're actually down to 8.12%. I think this is a miserable return, but I did say I would show every trade and every result, and this is what's happening. So our beat the market factor, I think, might be the lowest it's ever been. We're at 0.37, and you can see from our charts, we are significantly trading, we're trailing the S&P 500 significantly. I think we're behind on all our metrics right now. We're at 63% for percent winning trades. We'd like to see that more close to 70, which is consistently what it's been. So I'm going to keep trading this through the end of the year and see if we can't see any kind of a turnaround. But this so far will be probably one of the worst years ever in terms of beating the market, because we are clearly not. So I don't have a lot more to say about this today. I'm going to see what happens on the next couple of trades. Hopefully Adam won't stay out of the market while it's moving up and get in as soon as it's going down. This might be a really good lesson in what not to do in terms of buy high and sell low. That's not the plan. So we'll have to watch what happens on the next set of trades. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.